Morning everybody, Dwayne Chopper there, DRFX Forex Swing Trading. Today I'm going to take a look at the situation on the Euro US dollar. Gonna be looking for any swing trading opportunities that might present themselves for us over the next couple of days. And I'm also going to take a look at the 30-minute chart to see if there are any day trading opportunities that might be available for us over the next few hours. Today, May 25th. So, starting off on the daily chart, we can see that the market has actually been in a very extended sideways pattern since the financial crisis of 2008. Since then, the market has created several waves of uptrends and downtrends that has led to the formation of this large consolidation setup that we see here. Now, in the middle of 2014, we actually saw the market hit the resistance boundary for the last time, as it led to a sharp downtrend in favor of the US dollar that eventually led to the breakout from the support boundary in December of 2014. Since then, the market has continued to produce significant gains for the US dollar, and given the size of this consolidation boundary, this breakout is likely to continue for a very long time, and we are likely to see some further gains, significant gains in favor of the US dollar over the medium to long term. Now, in terms of the swing trading opportunities that might present themselves in the short term, here we see that the market created several downtrend lines along the way. The first of these was the long-term downtrend line, followed by another one referred to as the outer downtrend line, connecting the resistance points here. We see that the market also produced an inner uptrend line, an inner downtrend line rather, as well as a second inner downtrend line. So essentially what has been taking place is that the market has pulled back at this inner downtrend line, produced these pair of double bottoms, and rallied above the inner downtrend line to head towards the second inner downtrend line. Now, in rallying to this area here, the market created two uptrend lines in the process. This outer uptrend line, as well as this inner uptrend line. You'll also notice that the market also created a small pennant consolidation setup at this area here, which along with the inner uptrend line has now been broken. So as it stands right now, the market could be on its way to providing us with strong bearish signals to indicate the continuation of the overall downtrend in favor of the US dollar. Now, as with breakouts from consolidation, this pause and rally is very common with regards to breakouts. The market tends to take a pause and pull back over a brief period of time ahead of just before it continues to break out in the direction of the existing trend. So these bearish moves that have been taking place over the last couple of days could be the start of the continuation of that major breakout. Now, taking a closer look, what we'll notice here is that this pennant breakout started with this candle here, and instead of continuing to break out, the market actually pulled back briefly to test the support area here. This is one of the ways in which consolidations can be broken. Here we see that the market came very close, and in some cases it will actually touch the boundary as it tests the broken boundary before producing another signal. Now, another way for the market to do this, as we'll see here in this example on the Aussie Kiwi that took place earlier this year is for the market to U-turn, pull back, break out initially, and then pull back with a U-turn before producing another breakout signal. This was one of the trades that we took earlier this year, and we, based on the overall setup and based on the strength of this candle, we decided to take the trade and aim towards this area here. This was another one of the successful trades that we took, and a couple of days later the market actually went to our target as expected. So this is another way in which the market can break out from consolidation by U-turning, testing the boundary, and then producing another signal that leads to the breakout in the expected direction. So this could continue. So this is what is taking place on the euro right now. A test of this boundary, which could lead to a continuation of the breakout bearish in favor of the US dollar. Now, even though this consolidation has been broken, we still have the matter of this outer uptrend line that is still standing in the way. This breakout below the outer uptrend line is still not strong enough for us to justify an entry short at this period of time. We will need to see a stronger candle below this area over the next couple of days to justify an entry at this area here. Right now, as it stands, there is still the possibility that the market can produce a bullish U-turn that continues the breakout towards this trend line here. So until then, we're gonna have to wait for a stronger signal, give priority to the existing trend, and wait on a stronger bearish signal that could be produced later today or later on in the week. Now, in terms of the 4-hour chart, we can see that a small pennant has actually been formed above that outer uptrend line. So based on what we're seeing here, the breakout from this pennant could actually be the setup that leads to that bearish signal that we need on the daily chart. This 4-hour chart also holds a key in terms of day trading opportunities that might present themselves for us on the 30-minute chart. Taking a look at this time frame, right now there's any clear setup that could indicate or that could be used as a trade to continue the bearish movement. However, there are two possibilities that could be formed. There are two setups that could be formed and could provide trading opportunities for day traders later on today. We could see the market pull back even deeper and form a counter trend line if it were to rally to this 110.25 area. It could then U-turn and then break this area here, produce a strong bearish signal as it continues the bearish breakout in favor of the US dollar. Another possibility is for the market to actually form a pennant setup with a support boundary along what would be the support areas here, as well as a resistance boundary that could be formed if we see a rally and a U-turn at this area here. This too would have to be broken short with a strong signal. And in terms of a trading target, this euro US dollar pair generally has a 90 pip range, daily range on most occasions. So if we were to see the market start its movement at this area here, our target would be just around this 109.16 area here. So that is it for the situation. That is it for the situation on the euro US dollar. 90 pip possibility in terms of day trading, and we would need a stronger bearish signal below this outer uptrend line. So until then, Take care.